Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo Artisans. Cowboy here. We got a big week coming up, massive week for central bank data, and there is a stealth economic event that could really throw things off. It's something you might not be expecting to make a big dent in the markets, and we're going to talk about that right after we talk about what's in the description. Take a look in the description. There is a free algorithm in there. It's a link. When you click that link, it's going to direct you over to a video where you can actually watch me develop an algorithm. And if you want to make an AI trading bot, an agentic trading bot, this algorithm is the heart and soul of that bot. We teach people how to build that algo. We also teach you how to turn it into code. We show you the tools that traders use to connect that coded algorithm to their exchange so it can trade. This is the agentic aspect of it. And if done properly, you can be profitable while you're not even sitting at the computer. You could be playing golf, sleeping, whatever it is. Also, you do need to optimize the code for whatever you're trading. So you can't just like take the algo copy and plug it in. We teach you how to do all this stuff. And that link is going to show you how to get over to us so we can teach you how to do it properly. Also, 60% of the people who watch this do not subscribe. If you think what we do adds value, subscribe, like, and share it with your friends. All right, we're going to take a look at these charts today. The NASDAQ, USDJPY, Bitcoin, EURUSD, GBPJPY, gold, and silver. And there are a lot of central bank data announcements coming out. So we're going to jump over to forexfactory.com to look at when they come out and how they might affect the charts. So here we are, Monday the 27th. We have the Bank of Japan policy rate, and that is the stealth event that I was talking about that can really make a difference in the charts. It's stealth for two reasons. One of them is that you don't know what time it's going to happen. It's tentative. It could happen now, it could happen a day from now. So it's really hard to plan around the event and protect positions. Therefore, any positions I am in are already protected, meaning that if they go in the wrong direction, I'll be cut out of the trade before I lose money. Also, the Bank of Japan is very important. The Japanese yen and the Japanese bonds are essentially the liquidity engine for the Western financial system. And if they hike their rates, it's going to be very expensive to continue to fund the open air casino that is the stock market at this time. So we got to watch out for that. It could really, really push the charts around. And we're going to see where that might happen on the charts as we look at it. Now, Tuesday, 9:30 p.m. EST, we have the Australian CPI. That's their inflation data. And that could really push around the Aussie if you are trading it, which at this point I am. Wednesday, 9:45 a.m. EST is the Canadian Monetary Policy Report. So it's like the Canadian version of what is happening with Japan in the next day or so. And we also have our data coming out that same day at 2 p.m. EST. So if you're trading the Canadian dollar, you got to be careful after 9:45 a.m. for probably at least 30 minutes. They have their press conference also at 10:30 a.m. That could throw things around. And then we have the dollar, the federal funds rate at 2 p.m. and then the press conference a half an hour after that. So trading on Wednesday is going to be really tricky. I'd be really careful. I'd protect positions. I would only be in day trades. I would not be in swing trades. I wouldn't hold the trade for more than the amount of time it takes for those announcements to come out. Now, Thursday, we have the British monetary policy statement. So all those same rules apply. That's at 7 a.m. and it's going to affect the British pound charts. And of course, half hour later is going to be their press conference with Governor Bailey. The Euro have their refinancing rate, and that's at 8:15 a.m. EST, and their press conference is half an hour after that. Plus, we have Canadian GDP coming out 8:30 a.m. EST on Thursday, and we have the US GDP, inflation metrics, employment data, all coming out 8:30 a.m. EST. So really, Thursday is a minefield. You almost don't want to trade it. I'd say once that data is all out, however, it might be a great day to trade. There might be some volatility to take advantage of, at least for a couple of hours after that data comes out. And then there is the European Labor Day. Plus, the Chinese have the bank holiday as well. So Friday might actually be rather slow, except for the fact that the US banks are still open. We don't have any holidays. So trading USD pairs might be actually doable on that day on Friday. All right, so that's the events this week. Let's take a look at the charts to see how things might go. Now remember, these charts are predictive in as much as the data we have. We don't know what the banks are going to do. We don't know what kind of data they're going to put out. So it may be that everything we are going to do on this chart changes by Wednesday where the FOMC happens, right? That's why I have that line right there. But I'm going to predict based on what the algos are predicting, right? And then if these events are a surprise, then that'll change and these predictions don't really matter quite as much. But price after such a surprise tends to converge back to the predictions unless it's a very big surprise. So if I were to trade this, I would actually be looking at some structural areas. You have this level at 27,150 or so. We're on the way up. The NASDAQ hit twice right there, and it's a structural area, right? So that's like a good place to take a look at where price might reverse if it comes down. And if price were to make its way down to that, I might grab a long right there. So if price kind of came down here, I might look for a long, and then I might have my target way up here. And we'll talk about why that target is there in a minute. Well, let's just talk about what my trading strategies are at this very time. Now, I think price could be anywhere from just higher than it is right now, say around 27,700-ish, all the way up to 28,900 by the end of the week. It could be any of these targets. We're going to talk about why that number up there is up there. Just understand that if I were in a NASDAQ trade by Wednesday at 2 p.m. EST, I would be either protecting that trade or out of it. If I were to take a trade that goes a little bit longer term, say for 2 or 3 days, it would be after the data came out on Wednesday. Okay, so, but a great trade if price comes down to this level, if my algos agree with the move, I might have a long ready at 27,150 or so, have a stop loss. Yeah, we'll see. I'd have to calculate it properly, but roughly maybe 26,980, something like that. Might go actually a little bit lower, to be honest, probably 26,920, 26,910. And then I'd have my target all the way up to this 28,980. Now, if price were approaching this 2 p.m. on Wednesday, I would protect the position. And if that position didn't stop out, or even if it did stop out with no loss, I would look to re-enter that for that target up there. So why do I have this target? Let's back out a little bit, take a look at the weekly chart. Now, the reason I have this target is I'm looking back at price action in 2025. We're going to take a look at this big impulse from 16,450 or so all the way up to what was the all-time high in October, early November, right? That's an impulse. I'm going to put a Fibonacci extension tool over the top of that. And the 1.272 extension is right up at about 28,000, really 29,100. So I would be out before that at about 28,974. That's why that target is there. It's the 1.272 extension, front ran just a little bit. And then if you go all the way to the top here, you have the 1.618 extension, which is roughly at 32,610. So I probably would have a target just below that. Now, just for this week, though, I would be looking at that first extension target. That is why that is there. And I would either be looking for a pullback to enter and grab that trade, whether it's all the way down to this level, or perhaps if price were to actually head up and maybe get a pullback, say to here, I might grab a trade right there instead. Just all depends on what happens with the pullbacks. And I look at pullbacks, grab a move after that higher structure is broken, put a stop below the structure and move up. But these are, 3, 4, 5 to 1 trades. They're really good as far as the risk to reward ratio. Let's look at USDJPY. Now, USDJPY is going to be affected possibly by the FOMC Wednesday at 2, or anytime between now and say tomorrow at 1800. We could see the Bank of Japan data come out. Now, I'm going to do a quick check to see if it came out. Go back to the calendar here, just do a refresh, and no data just yet. So right now it does appear that there is some bullishness left on this. So I did have kind of a lower look, and it could still happen, but more than likely it's just going to grind up and to the right. Now, whenever the BOJ data happens, we could get a surprise, same with FOMC, but if I were to just simply follow the algos, we're looking at up and to the right. And I probably wouldn't trade this right now, not until the data comes out. If I were to look for a long and the data wasn't a terribly big surprise, a great place to enter a long would be at 159.104, which is right here, this line. And the reason I chose that is you have all these rejections where price tried to go down and bounced up and down and bounced up. And it did it numerous times. So that's a nice, strong support. So if price can make its way down there, I might look for a long once the data was already out for the Bank of Japan, and the long might be a swing trade going up to this higher bound, which is 159.83. That's the end of the dollar. Now, I would, of course, protect that position if we were near the FOMC, and maybe not need to protect it if the FOMC already happened and I entered it afterwards, right? So that's probably the best trade for the JPY on the swing timeframes this week. Let's take a look at Bitcoin. Don't really want to touch Bitcoin right now unless it comes to a very clear support or resistance. And the only very clear resistance right now is up right here. And that's at 79,500, right? Where the top of this big arrow is. So right there is where you see that. And if price goes up there, it's already rejected once here, once there. So if it makes its way up there again, I might consider some kind of a short. But again, we are in FOMC season, so I might wait for that to either come out, or if I were in the trade before that, I would protect it by putting my stop to entry. If I got the trade afterwards, I might be able to be a little more patient and let it run. But that's the trade I would look for. There is a bit of a support based on old price action down here at this 76,000. 76 was important. It was a peak prior to the current area, but I don't know that I really rely on that very much. I don't know that I would go long there. It'd have to be an algorithmic reason to go long at that point. So really that short that I showed you a minute ago is pretty much it. Let's take a look at EURUSD. So right now, the euro, I think, is going to, it's punching down a little bit like I thought it would, and I think it's going to grind up. If I were to look for a trade, I would need the euro to, for a swing trade, go all the way down to this low right here. And that low is based on this bounce right here, and that is at 116,693. Price came down to here, bounced up, then I might look for that long. Again, I protect that position if we're at FOMC. If it happened after FOMC, I wouldn't have to worry so much about protecting it, and I would be out of the position before this high right here at 117.56. So the trade would look something along these lines right here. Now, if I did get up to this level and there wasn't a lot of bullishness, I might consider a short on a lower time frame. But if you're not swing trading, it's just there's enough bullishness here to where I would be really careful shorting right here. I would be managing that closely or just taking low time frame shots. Let's take a look at GBPJPY. Again, this is a JPY pair with JPY consideration. I probably won't touch it until the JPY data comes out. Now, openly, I am in a AUDJPY position right now. I put the stop to the entry at this time, so there's no risk there. But anytime between now and really the end of tomorrow, JPY data comes out, and it's really hard to tell. Now, if the data comes out and there's a surprise and price makes its way down all the way to this level right here, which is 214.95, that would be a great opportunity, in my opinion, for a long, for me to take a long. Because we don't give investment advice here. We don't tell you what to do. But if price made its way down there, I would probably grab that long. If it was before FOMC, I might not worry about it so much because this is GBPJPY. It's not a USD pair. So I might go ahead and actually hold on to that long past FOMC, but still FOMC really can affect it. If I were being conservative, I would still protect the position. If it happened after FOMC, I would not worry so much. But remember, on Tuesday, the British data comes out. The Bank of England does their thing. So if I were in that trade before Bank of England said their rate information, then I would be protecting that position. I probably would be holding off until both these data came out. Both British pound and Japanese yen are coming out at similar times, and that's just a recipe for disaster, if you will. Just trying to trade both of those, keep those in line. I would hang back, wait till that's done, look for this long. You could also grab this short. It's, in my opinion, this pair is bullish. I don't like shorting into a bullish pair right now, but one could look to short right here at 215.93. But again, just like the EURUSD, I'd be trading that on a lower time frame. I'd be like way more conservative, right? Either shorter time frame trade, thicker stops, or if it is the swing trade, I would just be protecting the position and managing it actively. Okay. So I'm not going to even draw that out because I'm not going to take that trade. Let's take a look at gold. Gold's really tough for me to want to trade right now. It's bearish. You have these lower highs, and that appears to be continuing here. This right now does appear to be rejecting right there as well. If I were to take a trade, I would look for, the only clear trade is buying at this bottom right here, right? So I put these arrows on here so you can see that the bears are progressing, pushing price down, and then you have the bulls defending the same line at 46.62. So if I were to look for a long, the only clear place to take a long is at 46.62, and then it's probably going to not even go higher than wherever this rejects right here. I'll zoom in a little bit to make this a little more clear. So you can see it already rejecting right here, okay? So price has come up. It's already being pushed down. It's probably going to go like this. This will probably go even lower. Now, I'm not saying that's going to happen, just what it looks like is going to happen, right? So to grab a long on this would have to be a low time frame deal where there's just enough meat on the bone, and I probably won't do it. It's the only trade I see that's very clear unless you're doing a trend trade to the downside. And even then, volatility is like falling off a cliff. So there's less and less meat on the bone as this goes. So there's less and less meat on the bone as this goes. And it's not really been a very great thing to trade lately. It's been very, very choppy. Silver's going to be very similar, but in the end, with gold, we're going to look at what might be a bounce to the upside, actually. Believe it or not, that could happen. Right now, all indications are saying that it's going to drop out to the downside. It'll probably just kind of explode down once it gets to a certain point. And then where I look to take along is at 45.52, which is way down here at the bottom of the screen. Let's take a look at silver. Now, again, these could bounce up. They are precious metals. Precious metals have been bullish. Silver is a bit more bullish than gold. If I were to take along, it would be down here at this level. which is 74.50. If I were to take a long, that's a big if, because right now, again, it does appear to be rejecting, although that can turn around. We're already seeing lower lows. And even though this is a bit more bullish, we still have that same bearish look where you get these lower highs right here. And now this high that I just marked right here is not completed yet. It's still in process. Candle is not closed. And even so, it might still head up from there. But I would just, if anything, look for long at that lower level again at 74.53, or I'd wait for it to break below if it breaks below, and then either take the short on the way down or try to find a long down at 69. I just don't think there's going to be enough volatility to get there. And I really think that, and this is really kind of projecting way out into the future, I think there will be a break here and then probably head up actually after that. There's enough reason for it to head up, believe it or not. But when that break happens is hard to say. That might not happen till like way out here, right? It could happen here, it could happen there. And I think that's what it's going to look like, but I don't want to leave that on the chart because that's projecting a little bit too far out in the future. There's not enough data for me to be comfortable with that. At this time, if anything, I take longs, and I probably just will avoid trading precious metals right now. Just not a lot of volatility, and there's great opportunities elsewhere in the market. And that's what we do. We teach people how to find those opportunities. We teach people how to predict where price is going to go, when it's going to get there, and we teach them how to extract money from the markets on a regular basis. You can learn more about that with a free preview to how I build an algo. If you want to build an agentic trading bot, or if you just want to trade manually, the algorithm is the heart, the engine of that trade. You're going to need to have a way to predictably trade these markets. You need to have a way to scientifically gauge what your profit is likely going to be, and then you need a way to track your trades in a safe way where you don't lose a lot of money, to where you can get real-time data and truly predict how much money you could make with your algo, with your trading plan. We teach you how to do all that stuff, algofactory.tech. Get that free algo, take a look at it. Again, you see me build a very simple algo, turn it into code, show you the tools traders use to connect their algo to the market so it can trade for them without them sitting at the computers. They can play golf, they could be sleeping, doing whatever it is they do. However, you do have to optimize the code to trade whatever you're trading, so you don't just connect it and have it trade for you. You might lose money. You got to optimize. We teach you how to do that, algofactory.tech. Also, Tuesday, Wednesday, Thursday, 8:30 a.m. EST, we go live. And as this data comes out and after it comes out, we go ahead and reconsider, we recalculate, we right the ship if there needs any writing, and I will trade live. Now, the first 10 minutes are open to YouTube. You all can see it. And if I do find a trade during that time, I take that trade. I show you what that trade is. The next 50 minutes or so, I am in there with the Algo Factory clients. And I do the same thing, but they say, hey, what do you think this is going to do? What do you think that's going to do? And I just tell them what I think the charts are going to do. And then they make their trades based on what their decisions are. Now, sometimes people want help. I coach them. We do all kinds of great stuff at algofactory.tech. So please check it out. Tuesday, Wednesday, Thursday, 8:30 a.m. sharp. We'll see you there. Happy hunting.